All right, we are back and we have what is a new segment for us, the Emerging Market Pros, and I have with me Jack Gleason. Hey, Jack, welcome to the show.
Hey Steve, how's it going?
All right, Jack and I first met way back a few years ago, I think it was, when I was just really starting at Tasty Trade, and you were coming on as a guest on the show. Is that right?
That's right. Had a little segment called Get Trading at 22 where we taught futures and options spread.
And did you enjoy doing that?
It was a good time. I definitely learned a lot of new things that I hadn't done before in the options market. This is about going back almost 2 or 3 years ago.
Mm-hmm.
And I really enjoyed being the company of other professional traders, meeting you, Tom, Tony, Liz, and Jenny, and the whole crew.
Yeah, it was great. It was great. I was glad to meet you back there. So I want to just put out right here that this is the first emerging market pro segment. If there's anybody out there watching this that thinks that they are an emerging market pro, send me an email at slim@askslim, and we will talk about the possibility of you being on this segment. So I appreciate, Jack, you being on here. You are your website is majorleaguetrading.com. And
That's
what you essentially have is a live trading room. Is that right?
That's correct. We run a live trading room, primarily broadcasting the S&P futures market throughout the entire day, talking about support and resistance levels and just a general ton of the market with the
So if you're
internals.
doing that all day long, that must mean you're looking at real short-term things. Is that right?
Yep, that's correct. A lot of my support and resistance will come from larger time frames, but for the most part, we are an intraday day trading room for the E-mini futures.
So you call yourself a live trading mentor, right?
Yes.
So to me, mentor is a person that essentially shares a lot of information that they have and helps a person, helps even a group of people that you might be working with to be better at what they do in the markets. Is that kind of fit for how you see it?
It's definitely fit for how we see it. I take live questions all day, intraday. We got a little chat box window where I broadcast my screen. I'll talk about different setups, how they're looking compared to the internals in the market, and students will ask me their questions, why do this? Why wouldn't you do this? What is the underlying tone or bias in the market? And what is your opinion?
Good. How did you get started? When did you get started? How did you get started?
It's actually a kind of a funny story, but when I was about, I would say about 13, 12 years old, I would pick up the Forbes 500 and, I'd read through it. I'd see all these billionaires and wonder, what are they doing to get all their money? One of the continuous themes I saw was investing. And if they weren't investing, I realized that all of their money was tied to the stock market. That made me want to know more. At about 15 years old, I told my dad, "Hey, Dad, buy this stock, buy that stock." I told him to buy, 25 Apple at 25, Google at the IPO, and he didn't. So he told me, "Hey, son, you know what? You think you know what you're doing? Put your money where your mouth is." I gave him $500. I was 15 years old, and that's when I officially made my first quote unquote trade.
So that pretty means that you've been at this for about 10 years. Is that right?
Yeah, 10 years. So I'm 25, 26 in October, and I opened my first options account where I was actually executing my own trades at 18 as soon as I could, but made my first trade at 15. Yep.
That is so cool. I made my first trade when I was about 20, and I became a trader on the CBOE at 24. So I started out pretty young also. Now I'm calling you an emerging market pro. I don't want you to be insulted by that. It's more about the fact of the difference in our ages and how long I've been doing it because you may be past the emerging stage,
No
but
insult at all. I think I'll always be an emerging market pro because the market you're consistently learning, and if you ever stop learning, you get left in the dust. So
that's how I feel about it too. So I consider you a fib specialist. Now, I'm putting you in a pretty big class here because I'm having Carolyn Borden on the show back next month, and I've interviewed her before, and she's great. And I consider she who's called the Fibonacci Queen, and you to be some of the best Fibonacci specialists. Would you say that that's basically the core of what you do?
it is the core of what I do. The reason I like to use Fibonacci measurements is because it gives me a mathematical calculation of support and resistances. And I also believe, and I've seen it many times over, that there is some kind of programs attached to these levels. I'll go over a couple of them that are kind of in play on the larger time frame later on in the show. I do
Yeah,
know.
we're gonna get to your charts just in a second. I make an interesting comparison because I've seen how you do this on the real short term, and you essentially get messages out of the shorter term information about what the little longer term might be. Do I have that right?
That is correct. So my belief is that larger time frame trends will first turn on the smaller time frames, and there's a specific look to the beginning of a larger time frame trend. And usually, when you start breaking down, those Fibonacci halfway backs will hold immediately one after another.
So
And
those are like 50% retracements in either direction.
exactly, in either
Yeah,
direction. When the
right.
market is trending, you'll consistently hold waves at their 50% retracement.
So you know what's so cool about this, the way you look at it, is because I'm a psychoanalyst, and I look at the shorter time frame cycles to give me some indications about the longer term cycles. So it's to me the messages of the shorter term tell me about the condition of the longer term. I hear that the same for you, but really a different tool that we use.
Absolutely, couldn't agree more.
Yeah, that's great. So when I say style and method, I think about trading style is separate from method. Style is essentially your holding period, the vehicle you trade. The method is how you find the trade. What would you say your style is? What's your holding period? What do you trade?
My holding period is anywhere from 15 minutes to max a day, and that's when
Mm-hmm.
we have larger swing trades. Especially, I've moved into that time frame during the market we've had this year. I have swung trade before, looking, 3 to 4 weeks out, and I'll still look at those larger time frames. But prior to this week and Thursday and Friday of last week, this market has not really had much continuation to either side. So I decided to break it down, take it intraday, and capture the moves that I believe on the smaller time frames are easier to see, and kind of come out with the
One of
W.
the four most important attributes of a successful trader is flexibility, and you just described that. The market changed, so did you. So
Yep,
that's great.
I was forced to do that just because of the conditions we've had this year. I mean, it was the tightest range in, I believe, over 70 years. So I had to make those changes in order to remain competitive in the market.
That's great. Okay, so what we'll do now is I'd love to ask you what is your favorite trade right now, and if you could just show it to us on your charts, that would be great.
Okay, let me get my screen share going here, and I'm going to talk about an ES level that is currently my favorite trade.
Okay, so what's the time frame on this particular trade you're going to be looking at?
The time frame on this trade is actually, you could call it daily, monthly, or weekly. I just want to make sure my screen is up and going
Yep,
here.
we could see it beautifully.
Okay, cool. I'm going to talk about the ES and the Russell here. We're going to go to a let's go to a 10-year monthly chart. Um,
Wow. For a
what
guy who
I'm
trades in 3 minute increments, you're looking at monthly charts.
Yep. Well, my larger support levels also come into play. So what I'm looking at, and I think is a very significant level going forward, it is for me the do or don't for bulls or bears, which I'm looking at the 2007 high, taking that as my Fibonacci anchor and drawing it to the most recent high at 2134, which landed here in 2015. That
Mm-hmm.
gives us an 1860 50% retracement from the breakout of 2007 highs to the 2015 high 7-year super secular bull cycle. If you take it to a smaller time frame, and this is where I'll pull a support level and then analyze it on the smaller time frame. Specifically, I'm going to go to a 3200 tick chart here, go
Wow.
to a 5-day 3200, and we'll go back. I have a theory called first touch, and when I have a larger level like this, I want to make sure that when it comes down and touches that level, that there is active market buyers stepping in. I
So
believe
what
on
level is that you're pointing at? Because there's no scale on your chart.
Okay, that is 1860 half. So that is the level that came. That blue line is representing the 50% retracement. from.
Between the two highs, the highs of '07 and the high of now.
That is correct.
Hmm?
And so Monday, obviously, the open was, utter panic. We were a limit down situation. I think it's the first time I've ever seen a limit down situation. Um, and so I'm kind of ignoring that first few minutes of buying just in selling because I just don't think, computers or algos, whatever you want to call it, traders weren't willing to step in at that point. Even though you can see we had opened literally 2 points above that level, which I deemed to be significant. On the second test, we had come down and then had a 50, I believe it was a 50-point rally in about 30 minutes. So that tells me that there was very aggressive buyers on what I would consider the first touch of that level.
What time frame chart are you looking at again, so that the reviewers know?
This is a 3200 tick time frame. You could
Mm-hmm.
also look at a time frame at the 5 minute, but it is, or the 1 minute. But this, that move was so fast. I break it down to the tick chart, which is the amount of trades versus time.
Okay. That's fine, because tick charts are much better for overnight if you're looking at 24-hour trading.
Yeah. It can get boring looking at 5 minute candlesticks in the overnight sessions.
So the point you're making here is what?
The point I'm making here is this level, which is a larger 50% retracement, has had active buyers step in, and that to me tells me that if there's an accumulation phase that goes on here and we do not revisit these lows, I am going to look out towards a larger time frame target of 2263, which will be the negative 23% profit target of the 2007 high drawn to the 2015 high.
So your point you're making is that if we don't go down and break those lows, that essentially this is going to be a fake break on the downside, and then we move to new highs.
That is my belief. If we go down and retest and push through those lows, that situation will change. But right now, I'm going to respect the reaction we've had off 1860 and plan on trading it up for 300 points.
Well, you have S&P's up 72.30 on Wednesday, 72.90, which is a pretty big up day on the S&P 500. But I'm going to challenge you on that one and tell you that my belief, and for those people that watched my Future Speak segment today, I said that, well, the market is likely to go down significantly for a long period of time into 2016. So my work sees us moving down to 1607, and if that happened, that would change your mind, right?
Absolutely. And really all it comes down to is on this first test, I'm respecting the longs. The longs do need to step in and prove themselves. Otherwise, I'm more than willing to quickly change my mind if we go back, retest, and break through, get daily closes below that 1860 level. I'll be right on board with you.
Okay, thanks for sharing that chart, and thanks for sharing your analysis.
You got it.
All right, let's go back to face-to-face.
Cool.
All right, there we go. Got you back. All right, appreciate that. So that's really interesting. Now, of course, the core of what you're looking at is Fibonacci numbers. And the fact that it held at that 50% number and then had a lot of buying coming in has you believing that that was just simply a correction in the ongoing upward trend. Do I have that right?
That is correct. I have not studied the market as long as you, but I do think that when you have over 1,000 days without a 10% correction and you finally get one, that the market is still stronger than it is weaker. However, time can change my opinion, and so can price.
Yeah. All right. So we're going to have to get back on this one and see who ends up to be right, because I think that the market declines all the way through February to April of 2016.
You very well could be right.
We've got a good contest going on here. Jack, it has been great having you on. Really shared some good stuff. Again, this is an emerging market pro, and you can see he really knows his stuff. It's amazing how fast you move through those charts. People tell me that it's amazing how fast I do, but you're faster.
I learned from the best.
Yeah. All right. Well, thanks again for having us on. Remember, Jack Gleason, that's MajorLeagueTrading.com. He's a live trading mentor. He's got a trading room there, and go visit his site. Thanks for being on, Jack.
Thanks for having me, Steve. And if I could just say one thing, anybody who's interested in checking out my futures room, just go to mlt.amnovia.com and use the password major with the capital M. And you can watch me trade.
All right, that's a good thing. All right, Jack, thanks a lot.
Take care,
We'll talk
Steve.
to you again soon. Take care.
Bye.
Bye.
Well, I'm going to the city and I'm gonna do a steady